How we doing? We're doing case studies again. This is February 13th, 2023. I'm going to start doing case studies again. Try to post them every single day. If not every single day, at least 3, 4 times a week. Just have case studies. And these are just my interpretations just for me to have out there in video form. And also for me to sit down here and collect data. And maybe you might be able to benefit off of it. So here we have a case study. So this is the 15-minute chart. This is NQ. So here we have a new week. So this is a Monday. So Monday we open up with the new week opening gap. We drop down to a discount, and then what are we using? We're using that new week opening gap as fair value. That's a magnet on fair value. Notice here on this day we don't have any manipulation below true day open. This also is a Monday with no news before CPI. So what does that mean? 9:30 open is going to be the what we're going to look for the manipulation, and that's exactly what we end up having here. So kind of have a more soft bias coming into open, looking to see what liquidity is left on the table, where can we possibly manipulate, and then where can we possibly distribute. So right here, this is perfect. 9:30, we open up, we manipulate lower, sell stops here, right into where? This new week opening gap. We're respecting this new week opening gap. Why are we respecting it? Look at this wick. Boom, that wick trades back up in there, and we actually trade below this body right there. And then 15 candle expands here. So right now at this moment with this candle right here, we have expansion. What do we like to do? Retrace and then expand higher rather than just a full out reversal. And then here we trade up to a new day opening gap. These are two new day opening gaps clustered together, so that's fair value. We also have another new day opening gap, and look at the bodies right there. That's beautiful. And we trade back down to this BISI, and then we trade a little bit higher there. So this was very nice price action. We had that 15-minute order block right there, and yeah, that's that 15-minute chart. So let's kind of drop down. I thought I had a 5-minute chart, but here is a 2-minute chart, and this is right at 9:30. Hold up. I swear I had a 5-minute chart. No, I didn't. Okay, my bad. So this is a 2-minute chart. Here we're dropping down. We're dropping down a constant encroachment of the opening range gap. Is getting traded to within the 9:30 to 10 a.m. within the opening range, and this is 9:30 signature right here. So we trade up, buy stops are taken, and then we trade lower to sell stops are taken. So now buy stops are induced and sell stops are also induced. So buy stops have flooded the market, sell stops have flooded the market. And what do we have here? We have an SMT below 8:30 open. Notice how we're very far off with true day open. So the algorithm is going to refer to this 8:30 opening. We're within a discount. We're having an SMT. Smart money is accumulating these sell stops, and then they're going to distribute. And look at what we have here. We have a SIBI right here. We have, a BISI, and then we have a 5-minute BISI right there. And then here's a breaker on the 5-minute. This is kind of classic. I've seen this a lot where we have a breaker that we trade to within the first 30 minutes of trading, and this is what happens when we have like a 9:30 reversal type of thing, to when we have just a straight sharp turn in the market. The breaker is going to likely be the best entry or the better entry. Here we have BISI trading there within that breaker. We trade higher. We have another BISI order block on the 2 minutes. Very nice delivery there, and yeah, so that's that 2-minute chart. And here we have the continuation of us trading into those new day opening gaps. Here you have a 10:50 macro here. 11:30 lunch hour starts, and lunch hour actually trades in there. Lunch hour, what are we doing? We're accumulating, we're consolidating, and we're running on stops. Look at what we have here. We leave smooth edges after taking buy side, then we trade lower. What is this? Shift to market structure, imbalance right there, and fair value gap. You can trade it to right there. Just the sell stops right there. New day opening gap is used as a discount array to have us drive one time higher into here. Order block in this is kind of just me looking at this and back testing, but the discount end of that, the lower portion could be used as an entry instead of the high end, and even the high end could be used as an entry. We're trading that discount end right there into a balanced price range with these wicks, and then we trade higher. Here we have the PM session, 130. That's your opening price. Drag that out. And what do we have here? We actually leave equal highs. We put an SMT. ES kind of makes a more jagged edge there. So we have manipulation there. And what do we see? We have a SIBI right here. After trading higher, SMT above true day open is 2 p.m. Silver bullet hour. This is likely the silver bullet here. in case of that was concerning, we don't actually trade up into this. We leave a breakaway gap right there. So we're failing to trade in that gap. And we trade lower. So here we have a sell side imbalance, and then we also have a balanced price range here. Look at the wick. It's okay to mohawk into this balanced price range, but look at the bodies. That's beautiful. That is beautiful. And this gets left as a breakaway gap. And here we have this kind of zoomed out. So what are we trading lower to? We're trading lower to sell stops. And this is if you go on ICT's the 2023 mentorship, if you look at I don't know what lecture it is, but it's the PM session reversal model. This is exactly what this is here. 130. Sorry, after 130, we take a high before that formed to 130, and in this case, we don't actually take it, but we have SMT, so technically we did take it. So this is keying off of a PM session reversal, and that's when your silver bullets are going to be the nicest, is when you take those lunch hour highs, and you take some form of liquidity. And now we trade to lunch lows, that gets taken, and there's that, and then we trade one time lower here. Now we have a short-term, intermediate term, and then a short-term low there. That's a failure swing. What do you have? This order block right there. This is a nice order block. Big down close candle. Those are the nice order blocks that I like to look at and I like to engage in. They're always going to have, or most of the time, they're going to have responsiveness. And notice how this also is a breaker. So that's why this is a nice order block right there, because also a breaker that we trade into right there. And what is this? A propulsion. And where are we trading into? Smooth highs. So notice how this is the end of the day macro. Sometimes I'll just annotate it as 2:50 p.m. But pretty much we have a 2:50 p.m. macro to the 3:10 macro to the 3:15 to 3:45 to 3:45 to 4, and we have the 3:50. So we have 3:50 to 4. So we have 4 macros within the final hour. They're starting at 2:50. So pretty much this whole last portion of the day is just a whole macro, but they're individual macros. But as we see, liquidity enters, or there's a liquidity injection that happens at 3:50 p.m. every single day, and that's what happens here. We trade lower, sell stops, new day opening gap used as support here, and then boom, we trade up, and then we take these highs. But this is a very nice PM session, because AM session wasn't the greatest. Monday with no red photo news, and PM session. So also it was decent, and this is just some case studies on price. So here we manipulate, distribute, come back into the range during the final hour macro. Anyways, this is this case study. Hopefully you all have a good rest of your day.